Now we are going to be speaking about process costing. So what is process costing? When you are trying to create a costing method for a process. So for example, if you are creating cell phones, or if you are creating an iPhone, and you have the same iPhone, you are trying to create 1 million iPhones. Or if you are trying to create 1 million cars, and they are the same shape, the same size, the same product. So in that way, you use process costing for you to be able to understand how are you going to cost, how are you going to create costing structure for your process to be able to understand the cost of the final product that you are producing. So when you are using process costing, it's applicable to relative homogeneous products that are mass produced. Like I said, if you are producing iPhones, you are creating 50, 60 million of iPhones, so you have the same product and you are producing them using the same process. At the same time, it's an averaging process that calculates the averaging cost of all units. See, so in that case, if we understand, if you are creating 1 million iPhones and we figure out that the cost for direct materials, direct labor, and manufacturing overhead for 1 million iPhones is, for example, 10 million. So in that way, it's going to cost us $10 for each iPhone. Can you see? It's really easy for us to apply because we are saying, okay, we are using average costing for all the units. So this is how we start with it. We say, okay, we have direct materials. We get our direct materials. We are going to increase our work in process with the direct materials that we have. And after that, we have conversion cost. See here, we are mixing. What is conversion cost? We are mixing direct labor with manufacturing overhead. We are not separating them. So we are allocating directly our manufacturing overhead rather than applying manufacturing overhead. So in that way, we are saying work in process is going to increase because of wages payable, which is direct labor, and all the other manufacturing overhead. So that way we are directly, if you remember, allocating direct material, direct labor, and manufacturing overhead to our process. Then, when we are moving, look, we are working in a process here. So in that way, we are doing the same thing for each department. So we have Department 1, they are just creating the product. Department 2, they are just putting the products together. Department 3, they are just creating different colors for the product. So in that way, you need to move the product from one department to another, so you get all work in process from other department A into department B. And after that, you use new raw materials, and you use all the other labor and manufacturing overhead on department B. And after that, you have your finished good ready. So you will decrease your work in process and you increase your finished good. And when you sell it, you will increase your finished good and you decrease your finished good and you increase cost of goods sold. Can you see? It's really easy. It's a really easy accounting method. Now we are going to see, now it's going to get a little bit complex. Because when you are dealing with a process, if you think about it, you are dealing with something called work in process. You are working on some iPhones, but these iPhones, by the end of the year, you didn't really finish from them. You finished like half of this iPhone, half of this iPhone. But you need to really account for the cost of these iPhones for you to be able to understand, okay, how much cost do we have right now? So we use something called equivalent units. So the meaning of equivalent units is a concept that converts a number of partially completed units to smaller number of fully completed units. So like this, if we say we have half cup and half cup, we have in that case what? 2 half cups, so we have 1 full cup. So it's the same idea. If we have some products, they are 50% finished or 40% finished, we can say, okay, if we have 140% and 160%, in that case, we have 1 product finished approximately. So it's the way for us to convert these units that we didn't finish completely by the end of the month to say, okay, we have 1 unit finished. Like I said, to 1/2 of cups, they are like one full cup. Now, process costing. How we are going to use this? Now we are going to come to 2 methods. See, now process costing is going to get really complicated. It was really easy, now it's going to get complicated. Now we have something called equivalent units of production, which is the number of completed goods that could have been produced using inputs consumed during the period. So this is equivalent unit of production. We have 2 ways for us to calculate equivalent units of production. We have weighted average method and we have first in, first out method. Now this is the equation that we use. Cost per equivalent unit is product cost for the period over equivalent unit for the period. What's the meaning of it? Think about it like this. Do you remember we have work in process? So let's say that we have our product, and for us the product cost for the period was 1 million. So we have 1 million. And we are saying equivalent units for the period. What's the meaning of it? I can tell you, look what I'm telling you right now, that we have 1 million, the cost of that we used during this period to work on this product, and we have worked on these units, and we have them just 50% done. But we worked on 10 million units. So we worked on 10 million units, but we have them 50% done. So in that way, you can say that we have approximately 5 million units done. Because we have 10 million units, we have 50% of them done. So the equivalent, it's how many units we have approximately. So we have approximately 5 million units. Our cost was 1 million. So in that way, you can say that it's 20 cents the cost that we spend on each unit. Is it clear how we are doing it? If we are saying here, we have 1 million, and we are saying we have 10 million, we say, but we have them just 50% done. In that case, we will come up with what? With 20 cents. So the meaning of 20 cents, cost per equivalent unit. So the cost of each unit approximately is 20 cents that we spend on each unit. Approximately that we worked on each unit. Now, the way that we are doing it, this is just a general way for us to do it. We are going to see how we are going to do it over weighted average costing and first in, first out costing. Why? Because these units that are going to come at the beginning, if you think about it, these units, they may come and they are 50% finished, like this. And now, at the end, you are going to have some units, they are 60% finished, and some units, they are completely finished. How are you going to account for it? Which one are you going to include? Which one are you going to take out? Now we are going to see the example how we are going to do it under the two methods. So this is this is our example. The most important thing that you need to remember is this. Let me go to it so in that way you will be clear. Weighted average method will account for all direct materials and conversion costs. FIFO will account only for cost incurred in the current period. فمعناتها weighted average, it will account for all the direct material and conversion cost. FIFO will account for only what? The current period. So let's go back to the example and see how we do it. We are saying at the beginning process we have 2,000 units at the beginning. Units started during the production 2,000. We finished units. We have 10,000 units, and we're saying unit transfers to the next department 9,000, and we have at the ending of work in process 1,000 units. So we have 10,000 units accounted for. So we are saying at the beginning of the year, we received from the other department 2,000 units. They were completed for direct materials 80%, so we still need to do 20% work on them. And conversion cost, they completed 40%, so we still need to work on 60% of them. See, so these are not really completed, they are work in process. Now we worked on 8,000 units. Units started during the period 8,000 units. And in that case, we have 10,000 units, saying we transferred by the end of the period, so we finished completely, 9,000 units. And we have 1,000 units that we still to work on them for 10% here and 30% there. So next year we are going to start with them. Can you see? So at the beginning we have some units that we still need to add some direct materials to and add some conversion cost to. And we have at the end some units that we still need to work on. Right? So look how we are going to account for it. First we are going to accounting for direct material. Direct material added at the beginning of the process. So for direct material, look how I'm going to do it. Now we are speaking about average, weighted average. So weighted average, beginning weighted average, we say 2,000 multiplied by 100, it's 2,000. Why? Because I'm accounting here for the whole cost. I'm saying I'm accounting for all the materials that I have. So I'm saying it's always 100. For weighted average, it's always 100 when you are accounting for what? For the beginning, for the direct material. You have 2,000 units started with, multiplied by 100. So we have 2,000 units. We started with 2,000 units. Now we started and completed 7,000 units. And we have ending 1,000 units. Right? We started 2,000, we worked on 8,000, but we still have 1,000 left. So we started and completed 7,000, multiplied by 100 is 7,000, and we have ending inventory 1,000, so we have 1,000. So in that way, for direct material, equivalent unit for direct material is 10,000. We have 10,000 under weighted average. Why I'm accounting for this? See, you'll be like, yeah, but you have 80% here and you have 90% here, right? Look, I'm speaking about here weighted average. The meaning of it that I'm accounting for all the direct material costs. When I'm accounting for all the direct material costs, the meaning of it, that this 80% that's finished, I'm going to account for the cost that I have for it. So I finished this 80% last year, right? But I have cost. I'm carrying this cost here because I'm going to account for all the average costs. I'm going to take the cost of this finished plus the cost that I worked on them plus the cost that I have finished, and after that I'm going to say, okay, what is my average cost? Now you will see it, how I'm going to do it later. So let me show you where. Here. Can you see? For direct material, I am saying here the 10,000, but this is related to the cost, the 25,000 that I got for the materials that I worked on 80%, plus the cost that on the materials that I worked on them right now. So that will give me what? 8 for each unit. See, I am accounting for 100% of the direct materials because I am accounting for all the costs of them. Let me go back. If I go to FIFO, first in, first out. Look here what I'm saying. Here is completely different because they are first in and first out. So they are here first in and they are going to be what? First out. Because of that, I need to account for what? For 20%. What should I do for them? If you think about it, I have 5 products that I need to work on. If they are first in, first out, so I don't care about how much cost I had for them. I will care about what cost I need to add right now for me to get them out of the system. And I need to add 20% for them. So in that way I have 400 units. And I'm saying how many units I finished and completed, 7,000. How many units I have left? Because I have first in, first out, I also need to account for how many units I have left. I worked on them. So that will give me what? That will give me 8,300. Can you see the difference? Sorry, we were speaking, okay. Let's go back to direct materials. For direct materials here, I'm accounting for 0. I was speaking about conversion. For direct materials, I'm accounting for 0. Why? Because I'm saying first in, first out, so I'm not accounting for any of them. We have for materials that we finished and completed, I'm accounting for 100, and for the ending work process, I'm accounting for 1,000. There I was speaking about the direct material throughout process. Here I'm speaking about the beginning. The direct material, the equivalent unit of direct material at the beginning of the process. So I'm saying here, I have 0, I have 2,000 that I started and finished it, and I have 1,000 that I have in the ending of inventory. So in that way I have 8,000. So if you think about it here, I have 10,000 that I completed here for first in, first out. Well, I have 8,000 that I need to account for. Why I have just 8,000 that I need to account for? Let me go back. This is really complex. Let me go back. Look at this. Just look at this. I have beginning work in process, and I have units started during this period. For this, I accounted for the whole 10,000. Why? Because I accounted for this cost and this cost together. So if I'm saying for weighted average, I want to account for all the costs, so in that way I will account for all the units. For this one, I'm saying I'm just accounting for the cost of the units that I finished and completed. So it's 8,000, the units I finished and completed. And if you go back here, you will see here, I'm accounting for the cost of beginning units plus the cost of the units that I worked on. Here I'm accounting for just the cost of the units that I worked on. So in that way, I'm really not accounting for the beginning. Is it clear? It's a little bit complex. It's a little bit complex. So here, look, I have 10,000. I'm accounting for all of them. Here I have just first in, first out. Because I have first in, first out. So this is the beginning for me. Now I need to add a throughout process. So for me here, I'm saying, okay, the same thing. I have beginning work in process, I have started and completed, and I have ending work in process. And here for ending work in process, I'm interested in what? In the 90% left. Why? Because I need to take these materials out. So in that case, I'm saying, I'm interested in the cost of what? Of the beginning that I have here, because I'm accounting for this cost. I'm interested here in the cost of these 7,000 units that I finished, I completed, and I am interested in just the cost of what? Of the working process that I have left. See, I didn't finish them yet. Because I didn't finish them yet, so in that way I'm just interested in 90% of it. So these are the costs for me for the process. Now for first in, first out, if I want to understand the cost of the process, I'm interested in what happened in this process. I worked 20% on these items. So I finished them, done. And after that, I have the 7,000 that I worked on them and I complete them. And I have the 1,000 that I worked on them just 90%. So in that way, I have 8,300. Clear? See, it's not easy, it's not straightforward. But the way for you to figure it out is like this. You are saying, weighted average, we are always going to account for all the costs that we have. FIFO, we are not going to account for any direct material. Okay? Now we are going to speak about the conversion cost. So for conversion cost, the same thing. See, for conversion cost, we have beginning work in process, 100. Started and completed, 170. Why? Because we have 70 still here left. So in that way, if you think about it, we have some cars. We got these cars, 80% done. We worked on them. We finished them completely. Right? And after that, we worked on some of these cars. We finished 70% of them. So we have them done. So we have 9,700. Now for FIFO, we have 2,000. Think about it. We have 40% of the cars done. So we need to do 60% work on them. So in that way, we have 1,200 equivalent units. See, we are not saying actual unit, equivalent units. And after that, we are saying we finished 7,000 completely. And after that, we have 1,000 that we did 70% work on them. So in that way, these are the number of units that we have. See, now it's really complex, the process costing. I had this question, a very similar question like this. Like when I was studying for the CMA exam, they have so many questions like this, because in the CMA exam, probably you are going to get a question like that. This is a very, very, very common question to get, that you are going to get a question saying, okay, please calculate the cost of the unit. Look, it's one question. It's going to take you half hour. Just calculate the cost of the unit under the weighted average and the FIFO. So you need to do all this for you to be able to do this, to figure out exactly what is the cost. Because you need to figure out the direct material cost and the conversion cost, and after that they will tell you total per unit cost. Like I said before, under the weighted average, all direct materials and conversion costs, can you see all direct materials and conversion costs are what? Are included. For FIFO, only costs occurred during the period. See how you need to differentiate between them? Weighted average, all the costs that we include. Weighted FIFO, we only include the costs that we have during the period. Now, look, this is how we are going to do it. We are saying per unit cost, direct materials added at the beginning of the process. So, the direct material added at the beginning of the process, we have direct material, and we have conversion cost, and we have total per unit cost. Under weighted average, it's 14. Under FIFO is what? It's 12. How we are going to do it? We are saying beginning direct material plus the direct material that we used. So in that way, over the number of units, that will give us the average. The same thing here. Here we are saying no. The cost that we used during the period over the equivalent number of units give us exactly the cost. Per unit cost, direct materials added throughout a process. We are saying, okay, direct materials, we are saying, okay, what is the equivalent units for them? And at the same time, conversion cost, what is the equivalent units for them? And we figure out exactly how much the cost for the product, and at the same time for FIFO, the same thing. We are saying, but we are just looking at what we used during the period, not at the beginning. Clear? Now for you to understand the ending inventory valuation, you say, okay, how much is costing us, multiplied by 1,000 units left, so you figure out what is the value of ending inventory. And for you to understand at the same time the ending inventory value for materials added throughout, you do the same thing. Clear? Now we need to account for spoilage. Now we come up to the spoilage, okay? Now for the spoilage, they are saying, as with job order costing, normal spoilage will be left in the cost of goods sold. For نفس الشيء. We will leave it in cost of goods sold. Now for abnormal spoilage is recognized separately as a loss. Work in process, we take work in process loss in abnormal spoilage. So see, it's the same. The way that we account for spoilage in process costing is the same that we account for it in job order. Now this will give you more a clear idea about the way that we are doing it. Weighted average and FIFO. With weighted average, we are saying cost at the beginning. Look what we are saying. Cost at the beginning. This is to give you a much better idea. Cost of the beginning, you are adding direct material, you are adding conversion cost, you are coming to the total cost of the beginning of work in process. And after that, you are adding the cost of current period, which is direct material and manufacturing and conversion cost. You are coming with the total cost added in the current period. And that will tell you the total cost. And after that, you can account for any cost transfer out, normal spoilage, abnormal spoilage, you come up with the ending. For FIFO, look, you are saying cost at the beginning work in process, this. Look, you are not adding direct material conversion cost. You start directly. Cost added in the current period, and you add direct material conversion, and you continue. So see, with FIFO, first in, first out, I will take this, and I will work on them and get them out. For here, no, I will take all the cost, and I will work on them, and after that, I will get them out. Here, they will show you the structure, how we are going to do it. We have raw materials, so we have the raw materials coming here, and after that we are going to take the raw materials, assign them where? To work in process. We have direct labor, we take the direct labor, assign to work in process. We have, look, all the manufacturing overhead, we take all the manufacturing overhead and assign them to the process. See, it's really easy. We are directly assigning everything to the process. After that, we take process 1 and we assign the cost to process B. And the same thing, we assign direct material, direct labor, and manufacturing overhead to department B. And after that, we will assign them to finished good and after that we assign them to cost of goods sold.
In many manufacturing settings, all units are not necessarily started and completed in the same accounting period. To account for these partially finished goods, it is necessary to compute equivalent units. There are two methods for computing equivalent units: weighted average and first in, first out, or FIFO. We will use the weighted average method. Goods completed and transferred out include beginning work in process and goods started and completed during the period. These are 100% equivalent units. Equivalent units are also calculated for ending work in process based on their percentage of completion. The basic idea of an equivalent unit is simple. One unit completely produced is equal to 2 units half completed. However, in practice, the calculations can get somewhat more complex. One complicating factor is that materials, labor, and overhead are not necessarily added to the product at the same rate. Therefore, equivalent units must be calculated individually for each of these categories. This is simplified somewhat if overhead is applied using direct labor as an allocation base, in which case the equivalent units for direct labor and overhead will be the same. In process costing, labor and overhead are often linked together as a single element called conversion cost. To compute equivalent units for direct materials, the number of units in process is multiplied by the percent of direct materials added during the period. In many manufacturing settings, 100% of the direct materials are added at the beginning of the process. Therefore, the ending goods in process are considered 100% complete with respect to direct materials. This is added to the number of units completed and transferred out of the department to get total equivalent units for direct materials. The same process is followed to calculate equivalent units for conversion costs. The number of units is multiplied by the percentage of completion. The beginning goods in process and the goods started and completed are transferred out at 100% completion. Notice that the ending goods in process is less than 100% complete. All the equivalent units are added up for the department total. So for each cost category, the units completed and transferred out of the department are added to the equivalent units still in process to arrive at the total equivalent units of production for the period. Equivalent units become the basis for calculating unit costs. The costs assigned to each category for the period are divided by the number of equivalent units to arrive at a cost per equivalent unit for direct materials and conversion costs, respectively. These are then added together to determine a total cost per equivalent unit for the department. Calculating equivalent units is widely practiced in a variety of industries.
واضحة؟ شلون لقيتها صعبة شوي؟ شو هي صعبة شوي؟ confusing ما هي؟ confusing بس هلا رح انا اعطيكم مثال عليها من انت شرحتها شايفه هلا انا عم بشرح 4 طرق فيديو الباوربوينت شرح بالعربي لانه هلا صار هم بدي اشرح شوي بالعربي بعدين نرجع للكتاب هلا جوب اوردر واضحه ما هي؟ طيب خلونا نشوف الفيديو الثاني وبعدين ناخذ
The Departmental Production Report summarizes the information provided by the Process Cost Accounting System and makes it available for managers to use in their evaluations and decision-making.
We look at costs in our factories on a monthly basis for measurement purposes, and so the cost that's incurred in a particular time period in a month is assigned to the product that flows through that process of the factory in that month. This would be a typical report where you have a product and you have the overhead items and the material items and the total unit cost. And this would be a typical report a factory manager would see for a particular product.
Although formats may vary, the production report is usually in 3 sections. In one common format, Section 1 lists the total physical units and equivalent units to account for. The physical units include beginning work and process, plus those started into production. Equivalent units include those transferred out and ending work in process. The EU for materials and conversion come from the EU schedules shown previously. Section 2 reports cost information for beginning work in process and costs added during the period for materials and conversion. The materials and conversion costs are then divided by their respective EUs from Section 1. The result is per unit material and conversion costs, which are added together to get total unit cost. Section 3 reconciles the costs charged to the department by allocating them to the department's output. Using the costs per equivalent unit shown in Section 2, it computes costs for units transferred out during the period and for partially finished units remaining in process at the end of the period. These figures are added to arrive at the total costs, which must equal the total costs accounted for in Section 2. A separate production report is created for each department. Note that the figure in Section 3, representing total costs transferred out of the department, flow to Section 2 of the production report for the next department as costs transferred in. In practice, the format and frequency of summary reports varies between companies and even between departments. Different reports support different kinds of decision-making.
Okay.